$10,000 trades, $50,000 trades, and $100,000 trades. After 3 years, I finally figured out the blueprint to making consistent profits, and today I'm going to be passing that info on to you guys. This isn't just a basic tutorial where I'm going to be teaching you guys candlestick patterns or some of that other stuff that YouTube gurus makes to get some views. I'm actually going to teach you the steps that traders take to stay profitable on the charts. So I suggest you guys take notes and let's get started. The first thing when it comes to the charts is actually finding a fundamental bias behind your trade. Why do we need a fundamental bias behind our trade? Because every single zone that you're looking to play off, whether you trade support and resistance or supply and demand, order blocks, whatever it is completely invalid if the fundamental analysis does not go in your favor. The easiest way to get a fundamental bias is by checking the data releases on forexfactory.com, especially the red folder news, because those are the highest impact on the actual charts. So the next thing is reading market structure correctly. Now, obviously all of us know uptrend, downtrend, and consolidation, but this means absolutely nothing if you don't know how to act on it. So when it comes to us finding our uptrends and our downtrends, a lot of you traders, especially new ones, start to really focus on the lower time frames, thinking you're going to find more opportunities and scaling into better positions. But if you really want to stay on top of the things, you want to use your fundamental analysis and make sure that it's in line with your higher time frames, such as your daily and your weekly time frame. So if you guys can see here on USDJPY, we were actually in a great supply zone over here, but as you guys can see, price didn't hold on to that. Now, the reason why price didn't hold on to that, as I talked in one of my other videos, is we had CB consumer confidence that came out, and it came out greater than expected, which means that the economy was growing in confidence, and most likely growing in all economical aspects. So the dollar continued to move bullish. So just right there, just alone by looking at the forexfactory.com news releases, we're able to see that this area over here was invalid because we were fundamentally not in alignment. A way that we can act on the actual movements of the market is when we find an uptrend and start to see price slowing down. So even though we saw this overall move above, the day before that news release, we actually had a very nice sell-off, and I'm going to show you guys how we could have capitalized on that. So as you guys can see, we had a pullback candle here, price continued to push another high, a pullback candle, another high, and then price consolidated. At this point, we had a massive run, but then as you guys can see, we pull back and each push we have is getting smaller and smaller. So this is already my first indication that buyers are getting exhausted and we're seeing weakness in the market. Following these smaller pushes, we get this very big consolidation area, as you guys can see right here. Then you guys can see price starts to trickle down and gives us a very solid confirmation. If you guys just look at the minute 15 here, where price comes up, consolidates, comes down here, then pulls back up and gives us a beautiful engulfing candle towards the downside. So if you were to take a short position just off of here with a safe stop loss above the weekly, then you could be looking to take this move down. Now we had all this liquidity resting from this move here, as you guys can see that. And then we also had rejection order blocks resting all at the bottom of this move. So if you were to target the rejection order block resting over here, then you would have absolutely smacked your take profit for a nice 1 to 1.5 risk to reward ratio. Now I know that this isn't the craziest risk to reward ratio, but when you have such a strong zone in the markets in your favor, this can actually very much leverage you. So the reason why this still worked out despite the CB consumer confidence is this area here happened the day before that news released. So on that day, there was no high impact news for the dollar. And I was very confident that, we would see price flow the way technical analysis normally flows because there was going to be no fundamental analysis interrupting it. One thing I really want to point out to you guys is rejection order blocks. Now, the significance of rejection order blocks is that if we are able to find an entry for a sell on an order block, then there's going to be an entry for a buy on an order block. So all a rejection order block is when the charts show you the opposite side of your position that might be a potential entry. So that's where I always want to get out. I'm not looking to catch some huge gigantic move. I'm just looking to catch the move that I believe is the known area. If you're trading the known areas of the market, you'll have a much higher win rate. What I mean by the known areas is the areas where you can confidently say price, if this happens, if we're moving bullish, we'll reach this level here. Versus price, if we are moving bullish, could potentially reach this level here. So that's the known versus the unknown. So to me, the rejection order block is known, but I don't know if we're going to continue to break that zone. And that's why I don't target a further level and I just stop there for a safe take profit. Now, another way that I want you guys to identify structure is, let's say we're not resting in a crazy demand zone or supply zone on the daily time frame. Well, what we can do at that point is look for, if price is moving in this direction, where is price going to magnet to? So here's a good example on CADCHF. When I was looking at this pair the other day, we were actually resting right over here. Now, I'm looking at the charts and I'm seeing we are moving bullish. We also had CAD fundamental bullish news releases. So in my head, I'm thinking, where does this price want to latch onto? Well, I can see that we have an imbalance in the market right here. So to me, filling this area right here is going to be a very good target. Now, when I go on my lower time frames, like my minute 15, and I'm checking my news release, right? And I'm just going to show you guys this trade with the news release. So as you guys can see, the CAD news was actually forecasted to be shrinking, which would have moved this pair bearishly. But when we actually had the release and I can see the data, I see that everything grew. So this already gave me the fundamental bias that we will be moving bullish. So when I hopped on the charts, as you guys can see, price gives us a crazy move towards the upside. So at this point, I'm waiting for price to show me some sort of deep pullback and then pull back into the range moving bullishly. So I can see price comes all the way back up here, then starts to retest this low. It gives me a beautiful confluence where we start to consolidate here. And you guys can see I have this order block resting right here, but I also understand we have this massive imbalance. So I want to be patient and let price fake this move out, then pull back in. When it comes to news events and I'm trading on low time frames, I like to get rid of the early noise. So what I believe is that price shoots up, then comes back down to entice people to get back in. So people now are trying to capitalize on this bullish move. Price starts to shoot back up. They think they're in profits, and then price comes to stop them out. And if it pulls back into a range from above, then that's when I get in. So as you guys can see here, now we've pulled back into this area over here where we were moving bullish. So I've taken an order at this level here, just with my stops tucked under this level. Now, I have my fundamental bias. I've let the markets play the way that they want to play in order for them to make the most money. And now I can go on to my higher time frames and start to really find some good targets. So if I go on my hour one and I look left, I have this level here, which is a great rejection order block. And I also have this liquidity resting right here, which is also below this fair value gap. So if I go to current market and I just let this play out on my lower time frames, and I draw my take profit to these levels, that right there is a 1 to 3, which is a great trade. And we can even let this run all the way up here potentially, as you guys can see. So price starts to pull back a little bit, goes into the next day. But overall, as you guys can see, the price moves bullishly and starts to trend us upwards. So that 1 to 3 gets hit, price gives us a pullback, and then it starts to move further forward. Now at this point, once we've hit this 1 to 3, I'm for sure stops to break even, right? If I didn't close at that position. Now, when we create this massive pullback and push a new high, that's when I've decided at this point, price has created this sort of lower low and lower high as we have in a bullish pattern. So then I decide if price breaks under this level, I am getting out of this trade. A lot of the times people think, oh, you know, I have stops to break even. I'm just going to let it potentially hit break even. But if the charts are showing you that they're already shifting direction, don't get caught up. Even if you're only going to catch 0.5 risk to reward, it's still better than catching 0 or taking a loss. So that's my recommendation to you guys. So at this point, if you guys didn't close here, I would recommend closing out once we get this break under there. And in this trade, it would have still been a 1 to 1.3 risk to reward ratio, which means that you would have made more than you were initially risking. I hope you guys enjoyed this video. I hope you guys learned something new. And if you did, make sure to like, comment, and subscribe, and tune in to the live streams that I do on this YouTube channel almost every single London and New York session. I'll see you guys there. Peace out.